Hey everyone, hello, hello, hello. Hello, welcome back to my channel. All right. So for the past few weeks, I think for the last 2 weeks, this is the first time that I have a chance to trade New York session again, and it's been a profitable day since 9:30 a.m. I already gained $3,000, so now I'm using my my micro account for the purpose of educational purpose. So yeah, for the to those who's watching now, 4,000 viewers. Hi, hello, Ngenta, Ngenta. Hi, thank you so much for tuning in. Thank you so much for watching, and I'm here to share my strategy. If you are onto futures trading, forex trading, and if you want to pass, you're planning to pass your funded account, so you're in the right place. You're in the right place. Can you hear me? Everybody can hear me? Uh things think no one hears me. I don't know. I don't know. Oh, thank you, thank you. Okay, still there. So okay, I can share to you my strategy. You're good enough. At least I have an audience, but I don't care. I'll be posting this and I'm sharing this to those who are onto trading and having a hard time passing trading. I know you have your own strategy. You're learning, continuously learning how to trade, but maybe this will help you. This strategy is very simple. Nothing is complicated. Nothing is complicated on this strategy, and it's been there for the long time. Okay, so welcome back to my channel. Um, we will talk about trading strategy that can help you grow your trading account. For those of you who are new, my name is Nurse Gringo. I am a full-time nurse, and while nursing is my passion and allow me to help people every day, trading has become part of my part-time income, especially in future market. I don't have a ton of capital to invest, but that's where firms come in, right? They give you the capital to trade. Once you pass their challenge, you will have the capital. So today I want to dive into a simple yet powerful strategy that I've been using, and it's called moving average crossover with super trend strategy. So there's a lot of moving average strategy there. Oh, I just hit my first TP. That's a good one. Look at that trade. Beautiful, beautiful. Okay, so let's trail this. I think let's secure our profit. Okay, another 500 additional to the profit that I have for today. But okay, let's continue. As I've told you, we're going to dive into this strategy that I'm using, and maybe you will learn from this, and maybe you can use it on your trading journey. I back tested this strategy many times, like for the past couple of months, and it has, if you will use it properly, you will have, like on my back when I back tested it, like I had like 75, 65 to 90%. So the weakness of this strategy, I'll tell you in advance, is consolidation, but and the user, of course. But if you will able to execute the trade and control yourself, you will minimize your risk. You will have a chance to not hit your stop loss, or you can achieve a no loss trading. That's a huge claim, but it's really depends on the user. It's really depend on. So this method helps identify high probability trades, and if you stick to the rules, you can really see consistent result. So let's break it down into easy steps so that you can follow. So all of the steps that I'm telling you right now, it's on the description. It is there. You can check it, or you can copy paste it. You can copy it and then study it and then back test the strategy, and you will see. And I'm using an indicator that it's always available on all of the trading platform, or all of the charts, whatever the markets you're trading in, stocks, futures, forex, cryptocurrency. It's always there. And this is number one. I do have the set up your chart to Supertrend, and then this is the setting. The actual time and the ATR length is 14. The factor is 3. After that, set up your exponential moving average. Length is 21. Source is close, and add a smooth moving average 10 to that. You can also add the smooth moving average separately. It doesn't matter. You can add it. So the length is 10, and then your simple moving average. Length is 9. Source is close. Don't put any smoothing moving average in there. We don't need it. So this is the major indicator that we're using. Only this, okay? Only this. And this is a scalping method. So we are not looking for like a 15 minutes time frame. Well, we're not checking any. I'll put it back there. This is for the purpose of education. I already have my profit. I don't care if I lost this trade. So yeah, I'm telling you, we're not doing a top-down analysis, because we're purely scalping 1 minute time frame, and you can go down to as low as 15 seconds if you want, and you can apply this. All right. Now, once these indicators are added to your chart, now you're ready to go, and you will look for your entry. That's the most important, your entry. So now let's talk about when to enter the trade. This strategy revolves around two main confirmation: moving averages and the super trend. And here's what to do. Okay, so like for example, I have a tons of trade. I have like 4 trade, I think 6 trades already since 6 p.m. Of course, it's not since 9:30 a.m. And of course, I'm not a perfect, because I do have losses there. Since you can check on my previous live a while ago, 9:30 a.m. Session to 12, but I still gained 3,000, and then I think I have a loss of 800. So, and then a while ago, you see, I hit my profit, which is like about 600. So all in all, roughly 3,000 more or less today. Using my one of my funded account, and then I'm using Shadowbait, because so that I can connect it to the trading view. But my main account actually is on my the platform that my firm is using. So this trade most likely will end this trade very soon. So I will tell you why. I'll tell you why. I'll put the mark. I short this. I got my here. This is where I shorted. It's a very quick trade. I'll put. Then I already hit. Uh, 3.8 profit. So I already hit that a while ago. And then let's see. I'll maybe we will end this, and I'll tell you why, and why we're ending it in a while. Okay, where are we? So let's explain this trade. I will explain this trade, and I'll make this as an example, because I have a profit and then I have a stop loss. So this is a good example. Right. So number one, it's on the description. Wait for the moving average 9 to cross the exponential moving average 21. So if the moving average 9 crosses above the exponential moving average 21, so that is a signal to buy. But on this example, the moving average 9 crossed below the exponential moving average 21, which tells us that it's a sell time, right? So that's why I put my entry here in here. I will not. I'll keep on. I'll put it there because so that I can show you an example. So supposed to be this is our stop loss. I have an option to end this trade right now, but I'm not doing it for the purpose of education. Okay. Then after that cross, so where is that cross? Where did we see that cross? Oh, so we have the cross here. The blue line, that's the moving average 9, and the green line that's the exponential moving average 21. Okay, so where's that cross? There. There, right? Yep, that's the cross. That's the first confirmation, and then telling us that we're going to sell. And uh, second one is the super trend confirmation, and it's been there since 1300. The super trend support bearish momentum or bearish scalp. So it's all it's there. Some unlike this one here, once this one will cross the blue line cross the green line, tells me that I will there's a chance to scalp bull side. You see, and then supported by super trend by shifting it to the bull side. That's an example that we can, 1 and 2 confirmation to enter trade is already fulfilled, right? And then because this is a 5 steps process, you need that 5 step to be, or four to be fulfilled, and then number 5 is the entry. Step number 5 is the entry. Now after that shift of super trend and across a moving average, you're going to look for a displacement. I don't know. I don't know if, yeah, maybe the displacement is a candle formation that cause market shift, and this is displacement here, this candle here until here, right? This is a displacement, or I can say this is a displacement, that candle, and my displacement on this strategy falls into has a two category that need to be achieved, but either of the one, if you have it, you can take the trade. And first category for that is a formation of a fair value gap after the displacement, formation of fair value gap after the displacement. And where did I get that? uh, so while ago, this is the cross, and this is the one I took. This one as a displacement. After the cross, I took this candle here as a displacement. This is my displacement. I don't have this a while ago. I don't have this one. This big displacement here. It could be this one is manipulation. This one is displacement. There's a manipulation or a pullback, and then the institution trade or hedge funds or the rich people enter the trade, and that's caused this bear candle, like this sell out. That sell out is institutional trade. This one here could be yeah. So we're not that we're not I'm not here to explain that. Okay, so now I have that we have the cross, we have the displacement that I consider this one, and then we do have the displacement is like a market imbalance, and then created imbalance, or someone say if you were an ICT trader, we call it. I was an ICT trader before, but it's too complicated, and moving average is way easy. So now we have this a fair value gap. I said this is okay, good to go fair value gap. Although I'm not really confident of this trade a while ago, but I took it just because my indicator tells me to do it. Okay, so I enter a trade here. This level, I have like 10 position. I'm on micro. I sold here. So that's what here. So, and then I put my stop loss where the start where I think I put my stop loss here to be safe. Put it here. And the reason why I put my stop loss here, this is the previous high, and if I will put my stop loss here, it's supposed to be the ideal is to put the stop loss on the first candle that created the fair value gap, but I did not I did not. So it depends on your judgment. This one is too near, and I'm not risking a lot if I'll put it here. Even I will use, for example, mini. I'm still like, this is like how many pips? Like it's just 17 pips, so maybe it's around 200 plus or 300 risk. So we're risking 300, so it's still okay. So my tolerance is 500, like 500, 500 stop loss. That's my tolerance. Uh, 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 more than that, I will not risk more than 500. So that's why I'm trading more on a slow market using this moving cross strategy, or and I do that. My wife is calling. Hold on. What? Hello. All right. Sorry for that interruption. My wife called. All right. Uh, where am I? Okay. So yeah. So now let's recap. Number one, the crossover of the exponential moving average. Number two, super trend support the trade or the bias. Number three is the formation of the imbalance, and then number four, is the fair value gap. So that fair value gap is very important here, and make sure that the displacement, like displacement candle, this is my displacement a while ago. I'm not expecting this move. I'm not expecting it because still I'm thinking this move will happen at around 2 p.m. because that's the silver bullet time, and then formation of fair value gap. So that's why I do have this one here, and then I cannot consider this displacement because you see what happened. This could be a manipulation. This could be a manipulation, and then after that, yeah, after that manipulation, they hit some of the liquidity in here, then created movement in there, and then retail sailor are starting to march now. So yeah, so after we have that fair value gap, you put your like limit order there. The optimum entry for fair value gap is take the fair value gap, 50% of fair value gap, put your order there, or market sell there, and then this one you see the standard pips to safely trade this strategy. Ticks. or ticks. Ticks because I'm using futures is 40 in this indices, NASDAQ 40, that's my standard, and 40 is equivalent to I think 400 or 50 500. That's my standard stop loss. So yeah, so after that, you put your, and then the trade, you enter the trade, the limit order mitigated, and then you are on the trade. The number 6 steps is when to exit the trade. This is very important to minimize your risk, to minimize your loss, and there's a chance that you will not lose a trade if you follow it strictly no matter what. And this is to exit your trade. Remember this: when to exit the trade. Exit the trade when the moving average 9, the blue line, crosses the smooth moving average 10, and this is the red line. That's why I put it red. So like for example, this trade, I already hit my target, and it because you're not contented to this 1 is to 3.8 reward ratio, you let you become greedy. You're expecting that the price will go down in here, and then you did not say, okay, I will escalate more, I want the price to go here. Okay, you did not follow your strategy or your risk to reward ratio, and you're aiming for you're aiming to catch a big move, and that is not wrong. There's nothing wrong with that. Okay, there's nothing wrong with that, and that's why I add this smooth moving average 10, is because if what you wish for will will go against you, you have a chance to exit the trade early. So here, for example, you did not, you don't want that, and then you put your, for example, you just put your stop loss here because you're, yeah, here because you're following strictly your rule, or you just don't want to, okay, you put it here, the previous high, and you see you hit stop loss, and you can prevent that if you, how you prevent that, you can prevent that if you follow strictly the rules that I set. So once the blue line cross the red, exit the trade, no matter what happened, or no matter what, even your your instinct tells you not to exit the trade, because you see, if you exit the trade, you still gain, you still have the gain. See, most likely $90 for one, so you still have. And if you did not exit the trade, and you let your emotion, you just let your emotion, command you, and then you hit your stop loss, you have 300 or 250 or 275 stop loss, right? And you can always enter a trade, so that's why, if I'm not sharing this information to you, or I'm not, I probably end this trade a while ago when this crossed. But for the purpose of education, I did not. And I want the price to hit my stop loss when I put it here. But yeah, I think the trade is on my side right now. And then you see, you can always enter a trade again. How can you? Why? It's because you see, after that move, we have another signal again here. The moving average signal cross again, and then it crossed while while we have this sell out, which I will consider another displacement. Why? Because this, yeah, I'll consider this displacement from here to there. Why? Because the structure created a market shift. So I will say we have a market shift in here, although maybe minor market shift formation. and the major microchip formation on a 5 minutes time frame will be here later. Will be here, and so far, and since we're scalping, we'll consider anything. But by that time, for example, if I exit the trade by that time, by this time, I mean, I'm not yet into the trade. I will not enter into it. And where will I enter the trade? I will enter this trade later. I will show you. Once I have this market shift, we will enter the trade here. So you see, we fulfill our steps. We have the cross displacement, and now we have the fair value gap, and super trend just shifted to bear side, and I will put my entry here. So it's up to you. You can put your entry here if you want to make sure that you will ride. You can go, you can ride the trade, or or optimum entry should be on the 50% time, 50% of the fair value gap. So I'll put mine on the 50% of the fair value gap. So I'll sell 5, and I'll put my stop loss here. The first candle that created the fair value gap, but this is too near 100. It's we can risk more than that. So we'll see 167, and my take profit. So you're strictly following your 1:2 rules, but I'm expecting the price will so I'll put my stop loss here, but no, for the purpose of we'll do 1:2. We don't want to be greedy. Okay, let's see 1:2. And you can all if you yeah, if and then if the signal tells us that we need to add, we can add. It's none. Okay, we'll put it here. 1:2, 1:2 over there. Over there. Yep. Okay, it's 1:2. Now we'll see. So you have the setup, you have the optimum entry. Don't chase this, don't chase, because if you chase this, for example, you enter trade in here, you enter the trade in here, you're risking too much. You're risking too much. You see, you're risking too much. So just wait for the price to go to your, come to you. Wait for the price to come to you, and if not, let it go. Okay, don't chase it. Don't chase it. You can always find a setup. Setup is it's always there. This is all. These things is algorithmic. So the price will always move and always create a setup. It's always so. Uh, if you the only thing you can do is to wait, and that's why where most of the profitable, the profitable, I'm not a English good at English speaking. Most of those gain months on trading, it's because they have the patience to wait. They will not enter the trade unless they have the setup. They will not enter the trade unless they have the setup. So I think that's the secret that most of us, including myself, having hard time to practice. So that's the problem. That's our problem. If you are new to trading, and having a hard time passing your prof firm, you're having a hard time. You know, I don't. Maybe some of you have lost a lot already. You're not alone on this journey. That's why I decided to share my strategy. It's a new strat. I just discovered it early, I think 2 months ago, because recently I was for the past years, or for the past 6 months, when I joined Prof Firm and enrolled to Prof Firm, or the funded account. I was a pure ICT trader, and I learned ICT by watching. I spent almost 6 months learning his strategy, watching his YouTube, and my winning. I mastered Silver Bullet. I follow everything. I apply all of the models that he's been showing us, but still I'm not profitable because I cannot execute the trade exactly how ICT execute his trade, and how the most of the YouTubers showing how to execute the ICT. I lost a lot. I passed multiple account, 100K, 50K, 200K, 150K, and I blow it out. I blew all of those accounts because even though I have the understanding of the ICT, and it's still my emotion. I cannot control my emotion because I'm not really sure if I'm doing it right. I'm not really sure if I'm doing it right. So uh, I said I think I need to go back to basic. So I stopped trading. I stopped trading for 2 months, and then I went back to doing the basic, the trend line, the of course the moving average, the support and resistance. And guess what? Is it is where I became more profitable on my demo account. And I was surprised because I've been doing all of that for a long time, and I keep on ignoring the easiest way to gain from trading, which is the basic and the the basic pattern, the candlestick form pattern, the basic support and resistance, and the moving average. So I tested all of this, and then I combined moving averages and then tested it, all of it, and then it's where I discovered this combination of the moving average that you can use to scalp. So I haven't tested this yet on a higher time frame, like 15 minutes and above. Only 5 minutes and a minute because I'm a scalper. I cannot wait for the trade to to pass more than 4 hours or 6 hours. I cannot do that. I cannot sleep. I'll keep on thinking. And so I'm more on scalping, like 1 minute. I want my trade to be to end within 30 minutes or within hours or within 2 hours. That's the maximum. So because of that, I developed this combination, and I think I'm not the only one using this. A lot of people already know about this. So the description is down below on how to use it. If you're using TradingView, backtest this strategy, and you will see by simply looking at this chart, you will see you have an idea that okay, I will be profitable using this. So uh, on the description, I add some rules that need to be followed. It's not always like if you strictly follow it, maybe in a one session, for example, New York session like we have today, you'll have at least 1 to 3 setup if you strictly follow it. So don't enter the trade unless you have that setup, and it's easy. You will be able to pass your account. And then one thing, trust the strategy. So when I started using this, even though I already backtested it for 2 months, and on my demo account I'm gaining like huge 75% to 80% and profit. When I enrolled again to a prof firm, I didn't trust it. So when I see the price, uh, the setup, ICT setup, I'm not following it, and then I ended up like blowing my account again. So now I decided to strictly follow this moving average no matter what. Moving average is beautiful. You don't need a fancy strategy to earn in trading. Simple moving average will give you. Um, I'll give you an example. I'll give you an example. So this one here, when was this is 9:30, around 9:30 a.m. Okay, let's see. We go to 15 minutes, 9:30. Okay, tell me. Starting here, we have the news earlier, right? We have the news, and the dollar is strong. Employment rate or whatever the news is telling us to buy, right? It's telling us to go long. And I know most of you today is betting that the price will go up, right? And you're not wrong. You're not wrong. The price is going up. And if you put your premium and discount at 9 a.m., we are on a discount price, meaning most of the stock market. I am a stock market. I'm not a trader, but I invest in stock market. And a while ago, I add some of my I bought some stocks because the price is on premium. And even though the macro that we call macro or the technical analysis, if you're like thinking about the market structure, because this is an indices, so if you buy, you're thinking that the price of your stocks will go up, you will buy from this level. But even though that's is the technical analysis for today is going bull, you will never know. You will never know. So if you're a scalper, don't trust don't trust that, because you will end up like, for example, here. This is the news. And when the price was here, maybe most of you are thinking that the price will hit 300, or maybe we'll go where we'll pass this 300, and this is a psychological number today. Most of the people most likely put their sell order or here, or maybe stop order from the previous one, or sell order. This is a psychological liquidity, psychological number, psychological level is where how can I explain that? It's where the the all of the numbers like 300, 400, like that. So if you're stock market, you invest in stock market, most likely you will put your sell order there, or most likely on 2000, 20,000 you will put your buy order. So that's a psychological number, like it's a unconscious. I don't know how the brains works, but yeah, if you most of the people put their orders in there. So here you're thinking that the price will go up, and maybe you bet on selling, so you enter long, and then you end up going down. So you don't trust the market. Market will swallow you alive. Okay, will eat you alive. So like for example here, if you follow strictly this moving average indicator or signal, what will happen? I catch this move a while ago, and I have like 1,500. Uh, yeah, and I was taking care of my kids, so I did not I'm not following the trend. So I put my, because I was expecting to, I want to trail this move, but 1,500 you cannot have that. So you see, the cross was here. Where was that cross? See, the moving cross was there. The super trend support your trend. There's a displacement, and then uh, if you go to 2 minutes, I told you that 2 minutes, 5 minutes below is where you can find your setup. 5 minutes to even as low as 15 seconds. Like, so you have the 1 minute cross. Most of the time I'm using the 1 minute as my signal cross, and then because you're looking for a fair value gap, you will find on 2 minutes. So there's a fair value gap in 2 minutes. Go back to 1 minute. So where is it? You see, and then even in 1 minute we have a fair value gap. So this is the fair value gap that I I consider this a displacement, and displacement happened before the cross, and then I have all of the alignment or all of the signals. Displacement, also this you can do this as displacement if you're not considering this, because the candlestick pattern tells me to that the price will go down because of this rejection here. If you are like, yeah, uh, that's how you analyze. The simple way to analyze the market. You don't need to get fancy. And then the candlestick formation, we have a three reversal candlestick pattern. So I said, okay, this is a displacement. And then when a super trend shift and I have the cross, this is where I enter. It's a very small fair value gap. So after this displacement, I was afraid to enter the market because the strategy, the signal tells me that this is not the perfect. Then after this displacement, I put my limit here, and then I put my stop loss. I just put my limit order sell here, and you know where I put my stop loss? I put my stop loss here, this candle. And I'm not confident of this, but you see, I risked only like $150. Put it there. So my friend trading with me a while ago said, put your stop loss in there. See, you still on your tolerance, like 40 ticks. Why you did not put your stop loss there? Because because I'm betting the market to go up. I'm betting the market to go up because I bought some stocks. That stocks is under NASDAQ. I'm betting the market to go up. And as I said, okay, I don't want to risk double risk everything. I'll just put it here. I don't care. That's a good amount. But you know, the it is a strong move. And then I gain it. I think where I put it. This is where I put my game. I put in here on this block order, order block, that order block. So I gain. Yeah, I have this. And then again, I enter the trade again when this cross happened, and I have 1:1. And now uh, I close my trade here, and then I enter the trade again, and I have another one. And then this is my last entry, which is for educational purposes only. So I have, and then, but I do have a multiple entry a while ago here, and I got stopped twice for a price of $90 and $80. And then it's because the reason why is I'm not following my strategy. I was tempted to use my model, silver bullet model, ICT silver bullet model, which is because of this liquidity, a displacement that created the market shape, and we do have, I put my, this is my fair value gap, and I put my order there, and my stop loss was here. Then I got stopped, and then again I enter again because of this formation of the inversion fair value gap, and I got stopped again. So that's why I'm leaving ICT for good. I know some of the trader are really good at doing the ICT, but I don't care. I think it's a fake. And I'm just kidding. I don't care. I cannot execute ICT as the way they use it. So now I'm just using this very simple moving strategy that you can use, and I'm going to share to all of you. You can have it. I don't want any subs. I just want your, I just want you to like or subscribe, but I don't want any of your money. This is not. This strategy is there always free on all of the trading platform or trading chart. You can use it. Okay, so trading doesn't need to be complicated and headache because can't imagine. I've been through some depression while I am learning to trade futures. I lost a lot. Then I don't know what to do. I stopped trading, but something drove me back. Drove me. I was something tells me that okay, go do the trading. I don't know. My wife told me that I think I'm addicted to trading, but I think no, because I'm not risking anything, and I'm using proper. All right, bro, you always online. How do you stay online for such a long time? When do you sleep, and how much you? Oh, I don't know where you're from, but I live in the USA. I came from the Philippines. We moved here 2 years ago, and I'm a nurse. So uh, right now I work at night. So but recently, yeah, like the wallet. Oh, sorry. Okay, wait. Sorry for that. My daughter. That's my daughter. I think. Okay. Here's your card. Where's that going? It's not here. Hold on. Okay. Sorry guys for the interruption. Okay, so can you explain what is the green red line? Green and the red line. Okay, the green line, that is the exponential moving average 21. The length is 21 and the source is close. And then the red line, which tells me when the blue line cross the red line, that is the smooth moving average 10. The red line. Yeah, smooth moving average 10. So the length is 10. It's a smooth moving average. Okay, so if you don't know about the difference between smooth moving average and exponential moving average respond faster, and then the smooth moving average, of course, is smooth, respond late, and the exponential moving average will respond like they are on the middle. Okay, so yeah, so yes, I slept. Today I'm working day, so here in the US it's 2 p.m. right now. So of course I'm awake. Everybody's awake for now. Yesterday, last night, Asia time, I trade because I'm not working. So that's why I have a chance to trade on an Asia session. So I start my hunting time at around 8 p.m. I don't trade unless the market opens. So if so Asia time is 8 p.m. here, that's the opening, and then 9:30 is for New York. London session is 3 a.m. So London session, I used to trade London session. I love London session, but right now I love trading slow market, which is Asia, because Asia times no, less volatility, and I'm not risking too much. So this, you see, it's crossing the red, so we will close the trade because the blue line crossed the red line. You see that? So I minimize my loss. I have 145. So yeah, so that this trade is invalidated already, and because it is switching, you have a chance to enter the trade again if you want to. Let's see, because we're scalping, so we will scalp all of the signal. Sorry, so noisy outside. Okay, so let's see. If the blue line will cross the green line, we will enter the trade. We will enter the trade most likely. Yes, son. Likely. Oh, you want the apple? Okay. Okay, we'll enter the trade here. Let me. Okay. Yeah. Okay. All right. I'll be right back. Childcare. Okay, come on. Oh, you. Hello, bro. If you're still there, if you're still there, yeah. So orange line, is that an orange? I don't have an orange there, but yeah. You can set your own color, but my moving average is exponential moving average 21 is the green line. So I don't have exponential moving average 50. I disabled it. You can disable it. I didn't use exponential moving average 50. And then the blue line, that is my moving average, simple moving average. So there's two. There's a simple moving SMA too, but simple moving average. And then there is a smooth moving average, smoothing moving average. But I put that smooth moving average is under my exponential moving average 21. So I'm going to show you the settings here. Of course, super trend first 14 and 3, and this is my 21. So length 21, and then I put smoothing. That 10 is my exit signal. Okay, once the blue line will cross this, or once the simple moving average line will cross this. And then this one, it's confusing because they are both SMA, but this one is this one SMA is not a smooth, it's a simple moving average, and it's 9. And this, okay, if you get it, and you see how I was, oh my god, I wish I trade this did, but I was with my kid. So yeah, you see, there's another good entry here. We can have this maybe if the price will go back, but this is our range. Actually, the price will just keep on doing this until 2 p.m. Until 2 p.m. Uh, it's been okay, almost 2 p.m. now. Oh, it's 2 p.m. already. I didn't notice. If I notice that it's 2 p.m. already, I will enter this trade here. Uh, but we can still enter this trade if you want. We can have like, see, buy limit here. Buy. Let's buy this. Trade buy. Stop loss will be here. 121. Take profit will be weak. We have an option to put it here on this. Yep. I can put it here. Here is it. Here is the best like that. Uh, but yeah, the price will go back in that. This fair value gap. This is the only fair value gap we have right now after the cross and after the displacement. So I'll put it here. Okay, like that. And then we'll wait. We'll see. But it works before. It will always work, or sometimes not. But yeah, we have a good chance. Okay, so yeah. So if you have more question, if you have you read the description, you can copy paste that, and then figure it out. Go back test, back tested it. Back test it. Think, if you are using TradingView, like I'm using, back test the strategy, and you will see you will never get wrong using moving average. Okay, you don't need to be fancy, and then will help you also. What will help you be more profitable and more confident is learn about candlestick pattern, like the reversal pattern, because since we are scalping almost like scalping the reversal, like right, the swing. So learn that this, like this candle here, you see this three candle with this candle, one candle here, gives us like, okay, I think this is a reversal pattern, right? But of course reversal pattern is not enough to enter the trade, because like for example this one here, this 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 candles here, this is a reversal pattern, but well, we don't have like a tools to verify that, unless we have this cross, we have this super trend, and then all of the components that I put on my description. So I did not invent this, I just discovered it. I know maybe some people using the same strategy that I'm using, but I did not invent this. And then I want to share it to all of the people who wants to trade, to prevent you from losing a lot of money like I had before. So I hope this will help. Uh, okay, so I'm ending this video. This is it's a good Friday for me. It's a huge profit, and then I'll be I'll be back on Monday Asia session. That will be uh, I will show it to you. What are you using? What platform you're using? Are you using TradingView? I will walk you throughout the process on how to add. Are you using Tab? Okay, let's go to Top Step X. Okay, go. That's great. You go to Top Step X, and then on the Top Step X, go search moving average cross. Moving average cross. Tell me when you're there. No problem. You can use a separate indicator. Type smooth moving average is a general indicator. It's always because I'll show you. Um, I'll turn off all of this thing. Okay, because Top Step X is based on Trading View, right? There is this there moving average cross. I think. Mm. Or just put simply moving average or this one. I think this one is available on this one is available there. It's available on Top Step because I'm using Top Step too, but I'm not sharing my Top Step. I'm really sorry, guys. My Top Step X, because if I will share it here, the Top Step TV will be able to see it. There is only moving average channel on Top Step. Now, I have, oh yeah, moving. Yeah, okay. That's same. It is the same. Go to your indicator, the moving average cross, and change everything. Input, put 9, and you can disable this one if you want to. If you have this moving average cross, okay, I was using this, but it's kind of late. The signal gives a late signal, but very few. You can use it, but it's because short moving average and short moving they tends to move in the same speed, just the length is different, but you will have a cross like this, you see. And I will show you why I'm telling you it's late. It's kind of late for me, and I'll give you like wrong signal. So what you can do, if you have a moving average like MA simple, without the cross, like this, if you have a moving average like this, you add that moving average simple, uh, and then go to so setting should be whatever it is in there. It will be like this. Then after you have that moving average added, it shows either moving average or simple moving average. They are the same. And then add EMAs. This one, moving average exponential. Set that one on 21. Source is close. And if this smooth moving average is available under EMA, you change this to 10. Okay, and then you can color it based on your preference. So you activate the smoothing, put red if you want, put this as a green if you want, or put orange if you want, whatever color you want. Now you have the three lines. And if you cannot find the smooth moving average there, just simply search for the word smooth moving average or SMA. Like, see, baby, will show like this. And then just change the setting. Go to the input, put it 10. Always source is closed, chart is time frame, like that, and change the color. You can always add that. Yeah, are you following? Yeah. EMA cross, this is okay, but um, I found it more effective if you combine the simple moving average or the moving average without any exponential, without smooth. So that's the blue line, which means that that's the one tells you once that line will cross the EMA 21. That's your first, your number one. That's your number one, right? And then after that, the super trend. If you so that's it. That's the component of this. So everything is available in any chart, especially on the top step. I'm using top step, and in top step, I kind of I'm using that cross actually, but I'm kind of familiar already with how it moves. So even though I'm using that EMA cross, I'm opening my chart simultaneously with the trading view, so that's why I can see and I can compare. Yep. So that's how this. So the fair value gap is you are the one who will. It's not. It will not be available in there. You're the one who will put that fair value gap. So it's really simple. How fair value? What happened here? Uh, The fair value gap is everything, all of the gaps that created after the displacement. So how you identify displacement, you will identify displacement. I will clear up my, let's see, like for example, this one. I will put this cross. Okay. So how you identify the displacement? There's a lot of way how to like if you're using a different strategy. Some may identify displacement as different, but this is how I identify my displacement once that cross happen. And then there's a switch of, like for example here. Okay, I'll show. This is a good example. This one here. I will replay this to you guys. I like that. All right. Right now, we don't know what will happen. We are in 1 minute. Uh, where's my EMA? Where's my cross? You don't know we don't know what happened, right? Right. Okay. This is how you the displacement. If you're using Supertrend and the setting is length is 14 and factor 3, the Supertrend. This is a displacement. More. Okay. This candle here is an example of displacement. Like you see a lot. All of the big movement. This is a not good example. Sorry. Let's see 9. Where's my 9 o'clock? Uh, this is the best example. This is the best example. Am I right? Yeah, this is the best example. Okay, let's see. Before I end this video, I'll show you. So we're here. We're waiting for our signal. We're waiting for our signal. There we have our signal. There we have. Okay, we have the cross. The cross happened in there. And you see, not yet. It's not a confirmed displacement yet. Not yet. Not yet. Okay, now this is a confirmed displacement. Okay, this candle here after the shift of super trend to bull, we have the cross, we have the super trend. This one, if you're ICT, this is your if you're ICT trader, this is your displacement. But me, I have my own category of displacement, and this is my displacement after all of my signal is available, right? That's my signal. That's my displacement. And then we'll go up. Let's see again. And then there is your market shift. That's your market shift. And here is your fair value gap. We're asking for value. You do it. So a fair value gap is created by the displacement. That's my valid fair value gap. There's a lot of fair value gap here, but I'm following a one fair value gap. That's so this one here. See this gap? I will zoom it for you. If you're ICT trader, this is a good entry. You see this candle and this candle and this candle. There's a fair value gap. This one here, this gap here from here to here. That's a fair value gap, and this is a high probability fair value gap as an ICT trader. This is a high probability gap, and I will say I will put my entry here, my stop loss here, and I will aim for 1:2. That's ICT, but it's ICT is difficult. Yeah. Yes, kid. Okay. So that's why I switched to moving average because I'm more confident. So now this is our this is our fair value gap. It's kind of late. If you think about it, it's late because if you enter here, you already have that move. Don't think that way, okay? That's not how it works. No one can predict the market, but the moving average can because this is based on the movement, an average movement, and algorithmic movement of the thing. So if you are just aiming for 1:2, you will always have a chance to. So that's a fair value gap. See, will be that's an example of fair value gap, but it's not really good. That's an example of fair value gap. So uh, the reason you will not trade this one because if you trade this one, it's all right. You put your stop loss here. It's all right, you see, but you will end up, for example, we trade this one, okay? For example, that's why the red line is really important, and you put it there. You're risking 40. You're risking 40. Like for example, 40. You're following the standard rules is 40 ticks because 20, 30 on New York session is very narrow. Let's see, we're following 40, and you see, you will close your trade here, and maybe you will end up losing $20 or $50. So just no, you're crossing the trade here because that's the signal tells you to do. That's why it's really important to learn and follow the crossing here because it's where the red line and the blue line cross, meaning signal you to exit exit the trade. You know, you see, you haven't lost any because you're still on the green side. So that's the important of this one, like that. And then I'll give you example, another one more example. I don't know if you're following. I showed this already. This okay. Let's see. My rules is not to trade during 8:30 a.m. to 9:30. So I don't trade that. Let's go back to Asia session. I have a lot of win like yeah, Asia session. Let's go back. Asia se So this is my favorite session. Yes. Okay. We'll see this one because sometimes it tend to moves on one direction and then you see the volume small. Okay. Yes, kid, coming. More time. So start using applying this one on an Asia session. You will love it. We have the cross there. Show you. This is beautiful move. Very. You see the super trend shift number 2, and then you have the displacement, right? You have this displacement, and then now what are you waiting for? You're waiting for the fair value gap. Okay, there you have the fair value gap, and I will show you. Let's replay this. So looking for buy. Buy. See? Up. Not yet. And you put your stop loss. So I'm on micro. Let's switch to, sorry. Let's switch to, like for example, we're using like a mini. So mini is equivalent of 10. Okay. You bought there. I put your stop loss here. You see? This is a small stop loss. Let's go down. Because you're good at how many ticks? You're good at 40, right? That's the standard 40. You see, you're just like just 30, 13, and then you're aiming for 1:2. You see, it's a beautiful move. So you are not closing your trade unless this blue line will cross the red. Let's do that. Let's do that. Let's see how much you will have. That's why I love Asia. So Asia, don't trade between 7 p.m. New York time to 8 p.m. After 8 p.m., start your hunt. Trade all of the signal and manage your risk. See, I have this last night. It's a beautiful trade. I love Asia. The slow market. So while uh, Asia time will end at 11 p.m. After 11 p.m., don't trade. But for me, once I have a win or 1:2 win, then I'm ending my trade. Okay, there. Okay. Not yet. Not yet. Waiting for the red line. Oh no. So I have it, but I think I gain only 1,200. Okay, it's there. Sorry. So you see, even though I'm late, for example, you're eating and then you did not check, and then the red line, the blue line cross, you gain 1,200, right? It's a slow market, a beautiful movement. Then you have 1,200. I'm okay. Said I'm okay with that. But you are a greedy one. You want to sell this one. You can because the signal tells you. So this is the fair value gap again. So you draw your fair value gap, every gap that created by three candle, and then let's see. Buy. Okay. Buy. I buy. Sorry, sell. That's sorry. Right. I yeah. Well, it's simple like that. Yeah. Uh, did we won? Like yeah, I ended it accidentally, but that's how you find a fair value gap. So I hope that is clear. Uh, yeah, my yeah. Thank you so much for tuning in. So it's study time. Please follow and subscribe. I will be trading live, and you will see sometimes I'm emotional, sometimes I have some loss, but I don't care. I'm sharing it to you. I'm telling you the strategy is perfect, but the user is not perfect. Even me, I do have some immature entry. I do have some. So don't don't dislike the strategy because I'm executing it bad. I'm not that good trader. That's why I developed this and I'm sharing it to you because I became profitable once since I started this moving average cross strategy, and I'm not using my brain too much, and I'm not being emotional. So yeah, if you see some of my videos that I lost because I lost while using this, it's because I'm not following my strategy. Uh, okay, but this moving average is okay. The user is not always okay because there's some emotional part of it. We're not perfect, but try to practice, back test this, and you will pass all of the funded accountant. Maybe you will be rich. Don't forget me if you become millionaire or billionaire. All right, to those 5,000 watching. All right, thank you so much. Thank you so much. Bye. Have a good day.